The Federal Reserve just wrapped up its March 2025 FOMC meeting. And guess what? No rate cuts yet. But don't worry, this story is far from over. Today, we're diving into when rate cuts are coming, how Trump's new tariffs could change everything, the 2025 to 2027 housing market forecast, and the big question, are we heading for a crash? If you're investing, buying a home, or just curious about where the economy is headed, this is the video for you. Hi, Lisa Home Loans here. I'll help you navigate home loans, real estate, and smart money moves. So hit that like button and let's get into it. In March 2025, the FOMC announced that they decided to keep interest rates steady at 4.25% to 4.5%. No surprises there, but here's what you need to know. Inflation is still higher than they'd like. The Fed wants it at 2%, but the core PCI inflation is projected at 2.8% for 2025. The job market is still strong, which means no rush to cut rates. The Fed expects 2 rate cuts this year. But some analysts think it could be only 1 or not at all if inflation sticks around. So, the big question, when will the Fed actually cut rates? Are rate cuts coming in 2025 or later? The Fed has hinted at 2 possible rate cuts this year. But will they actually happen? So what could delay rate cuts? Sticky inflation, thanks to higher consumer prices. Strong job growth, keeping wages up. The impact of new tariffs. More on that in a second. What could make cuts happen faster? A recession starting to form? A slowdown in consumer spending and job losses? Financial markets pushing the Fed to act. Right now, the most likely timeline for a rate cut is mid to late 2025, but things could change quickly. Here's a wild card. Trump's new tariffs. If you missed it, Trump has announced new tariffs on China, Mexico, and the EU. What does this mean? Higher prices on imported goods lead to more inflation. To fight higher inflation, the Fed keeps rates higher for longer. And businesses may cut jobs if costs rise too fast. This could delay or even cancel the Fed's planned rate cuts. So, if you were hoping for cheaper mortgage rates soon, you might need to wait longer. Which brings us to our next big topic. What's happening in real estate? All right, let's talk about housing. Here's what you can expect in 2025, 2026, and 2027. 2025 housing market. Home prices up 2%, median price $410,000. Mortgage rates around 6%. 2026 housing market. Another 2% price increase. Median price $420,000. Inventory improving slightly. 2027 housing market. More uncertainty. Will the market cool off? Possible price correction in overheated areas? The big question. Are we heading for a market crash? Now let's break down the case for a crash. High debt levels in real estate and corporate America. Delayed Fed rate cuts could slow the economy. Trade war risks, adding economic pressure. How about the case against a crash? No major housing bubble like 2008. Unemployment is still low. Fed can step in if things go bad. Most experts say a market slowdown is likely, but not a full-blown crash. So, should you be worried? It depends on your financial situation. If you're investing, stay diversified. If you're looking to buy a home, look at your financial situation or your needs. So, what's next? Rate cuts could come later in 2025, but it's not guaranteed. Trump's tariffs might delay them and keep inflation up. Housing is still growing, but it's slowing down a little bit. A crash? Not likely, but a slowdown is coming. So, what do you think? Will the Fed cut rates soon? Will the housing market crash? Drop a comment below. I'd love to hear your thoughts.